Michael Lasser, UBS equity research analyst. You've been recommending Target in that period, Michael, and what do you tell clients if you have been?
I knew I was going to get floored, Joe. What we are saying is that while you cannot put a positive spin on the first quarter results, the risk reward for this stock is squarely tilted to the upside. If you take the low end of its updated guidance, which is $7, right now the stock's indicating $95 in the pre-market. That means it's trading at 13.5 times. The broader retail index is trading around 16 times. So Target is trading at a 15% discount to the broader retail index. I don't think you can argue that Target is 15% worse than other retailers out there. Yes, it has had a host of challenges in the last few years. But with that being said, at the midpoint, it's going to earn $8, which is pretty consistent with what it's earned in the last few years, showing some level of consistency. So bottom line is downside is limited. Upside is significant here if it can get it right.
That shows a little bit more there. So one stock down 40. Are they totally different businesses? How do you what do you attribute those numbers to? One stock up 150% and the other one down 40%. Does the one have a bad hand 3 or 4 years ago? One of the company? Or a great hand?
Yeah, the way we would state it is two things. One, there are differences in these businesses. One is a consumables retailer that has a general merchandise business attached to it. The other is a general merchandise retailer that has a consumables business attached to it. The mindset of the consumer is different in how it thinks about those businesses. And second, one has executed at a pristine level over the last few years in Walmart, and the other has executed not well and has really significant room to improve its execution and double down on its strategy. Because that's the other thing. Others have caught up to Target strategy. Target strategy was all about being differentiated, unique, surprise and delight. Now you can find surprise and delight as a consumer in a lot of other retailers.
So you've got it at a level where you can buy it, where if they were to execute it, if they were to fix what were they, inventory concerns? They closed Canada. I don't know. They did do some woke you go broke stuff, obviously. I don't know who bought those bathing suits that had little pockets. I don't know what the hell that was. But they've done some stupid stuff, right? What would you fix?
I think they need to do two things. One, execution needs to improve. That is inventory forecasting, customer service in the store, having the shelves stocked properly. Retail is a very low switching cost industry, meaning that the consumers can simply press a button and find an alternative place to procure goods. That, as a result, every single time a retailer needs to effectively serve its consumer in order to hold on to its customers. So it needs to do a better job of execution. And two, it needs to double down on what made Target special and unique in the past. For instance, this past quarter, it noted that its partnership with Kate Spade was its best effort. It needs to do that more often and have the reason to go to the store and buy at Target more frequently for the consumer.
Yeah, because it had it going there for a while. It was everybody loved it. Logo, the experience, and I don't know, lost its way, at least for shareholders.